This is Laya Gavin with Team EXIT Realty Sun City, and I am the licensed broker and hiring manager for Team EXIT Realty Sun City, part of the EXIT Realty Place office. And I've got a couple of guests with me here today that I wanted to have join us to just share some information about what's happening in this new world that we're working in right now, and still trying to take care of business, take care of clients, close transactions, and just, keep everybody on track with what their dreams and goals are, but still being safe and being mindful of how business is changing right now. So my guests today are a double dynamite team from Fairway Mortgage. I've got Don Buxton and Craig Gallegos from Fairway Mortgage, and they work together to help clients close transactions and finance and refinance properties. So Don and Craig, first of all, thank you very much for joining me today.
Thank you for the invitation. We're really excited these days.
Yeah.
Right.
Well, my next question is surrounding the refinance business. I know I've heard that lately, and you can tell me exactly how much, lately there's been a significant uptick in the amount of refinances. And so for somebody who says, you know what, I'm not trying to buy a new house. I've been in the house that I'm in for years and I like it and the family's not moving anytime soon. What should they be paying attention to right now in this current market?
First of all, they should get started. They should reach out and talk to somebody right away, because the backlog for refinances right now, and I'm going to let Craig tell you a little bit about numbers, but for anyone who's thinking about it, that they have a rate that they got a year. So if they have a rate that's above 4.5 right now, they should at least reach out and talk to somebody, get a total cost analysis, compare what is the current rate is compared to their existing rate, see if there are savings options as a rate and term, see if there's a savings option not only on the mortgage, but is there a way for us to do some debt consolidation for them right now to reduce their total monthly outlay, not just the mortgage? Get started on that, figure out what that looks like. And if that savings is something right now that is good for them, they should move forward. We've had a number of borrowers who started the process, didn't lock, looked at the Fed rate drop last Sunday as my rate's going to go to 0. Which they're not, and wouldn't lock, and now find that rate dramatically different than what it was. So
overnight, it was went up basically over a point, 3/4 of a point to a point higher than where they were on Friday and Monday. On Tuesday, a week ago, they were right up. Yeah.
So we're
because of sheer volume.
Yeah. Well, that's not necessarily from volume. That's from the Fed doing everything that they can to protect our economy right now, but us as consumers not completely understanding what those actions that the Fed takes really have on us as a market. And the market's extremely volatile right now, but rates are still down. So anybody that's looking to try to reduce their payment, or another big thing, to get rid of mortgage insurance, because we've had such great appreciation in the valley. We need to have that conversation. Don't wait. Don't wait because you think rates are going to go to 0. They're not going to go to 0.
No.
So talk to somebody now and try to take advantage of those savings today, when it might be very helpful. And I'm going to let Craig tell you just a little bit about the capacity issue.
Yeah, and that's really why, that part of the reason the rates went up is because, as a whole, there's about $11 trillion in mortgage debt in the United States right now. If you look at all the houses out there, and on a typical year, mortgage companies do between $1.75 to $2 trillion, whether it be refinances or purchases, things like that. So when rates started falling because of COVID-19, and people were scared, the rates came down, and we had such an influx of applications that they kind of had to just say, whoa, we need to back off a little bit, because you can't refinance $5 trillion of mortgage debt in 1 month, when we do that, in 2 years. So we just kind of had to slow things down, because
as an industry,
yeah, as an
not
industry,
as a company, as an industry.
Every single mortgage company out there said, we don't have the warehouse lines, we don't have the money or the capacity as far as personnel goes to get all this done right now. So that's why I think it's really smart what Dawn had said about just get started. And once things do slow down a little bit as far as that goes, we can be in a position to move forward right away.
But if savings is there and you can save money right now, there's no reason not to do it right now either.